Hello and good day. Let's analyze the daily chart of Solana on February 21st. Yesterday we saw a bullish move where a morning star pattern formed, and it is predicted that today the price is expected to continue.
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
Its upward trend and eventually enter a rejection block area at the 87.94 level with a 17% probability of a downward trend. We can use this opportunity to enter a sell position. The stop loss should be placed behind the rejection block area, targeting the swing low in the market. However, if selling pressure in the market increases, the price could move downward from this very area so that it can collect liquidity towards the sell side, and there is a drawn liquidity level at 76.6, which could attract the price towards itself. Analyzing the 4-hour time frame for Solana's chart. We can see the price movement, which, after breaking the structure and moving downward, has entered a fair value gap area. The value gap reacted to this area and failed to break this level. Ultimately, a morning star pattern also formed on the 4-hour time frame. As we can see, with an aggressive move, it is currently moving upward, and we anticipate that this bullish trend will continue. If it enters the area or the rejection block, and if a weakness in the bullish trend is identified and after taking liquidity, do not rush to enter. On the buy side, if the price closes in that area or the rejection block, we can enter a sell position. However, if it is accompanied by positive momentum and closes above the 86.9 level, it can continue the trend. It can continue its upward trend until it enters the range of a pin bar candle at the 86.83 level or at the area of increased liquidity. As long as there are 3 positive signals in the market, it can continue its trend, and ultimately, the next resistance level could be limited. There could be an order block at the 89.17 level, and entering this level would be a trading strategy. A swing failure pattern forms, and after a structure break or a break of the 30 level, we can use this opportunity to enter a sell position as well. We set the stop loss behind the range, targeting the liquidity levels in the market. By analyzing the market sentiment, we can see that it is still in a consolidation trend and has a negative outlook, but with the stabilization of clarity, the price could find a positive base in the market and sentiment could start moving towards positivity. Also, if the price moves downward and does not collect the buy-side liquidity, by entering the pin bar candle zone, it may attempt to form a lower swing or enter the order block zone, increasing the chance of continuing the bearish trend. We can enter a buy position, which is the second trading strategy scenario for a buy position. We can place the stop loss behind the swing at the 81.77 level, set it with the target being the high, the swing high, and the order block zone at the 89.18 level. However, at the level of interpreting selling pressure, we can enter the order block zone at the 81.19 level, and after a break of structure or a market structure shift, we can enter a buy position and set the stop loss behind the order block zone. Aim for the target levels to achieve success and prestige in the market.